I didn't grow up around money, but a few years ago, something clicked, and I started paying attention to what wealthy people actually do with their money, not just what they say they do. One thing became clear. The rich don't just save money, they grow it. And what shocked me even more, a lot of what they're investing in right now isn't out of reach for regular people like you and me. Here's exactly what they're putting their money into, and why I've started doing the same. When I first heard the term private equity, I thought, that's not for me. That's billionaire stuff. But I learned something wild. Thanks to crowdfunding platforms like Republic and Start Engine, you don't need $100K to get in anymore. I personally put $250 into a fintech startup I believed in last year. It's high risk, yeah, but if it grows, so does my little slice. Angel investing used to be something only rich people with connections could do. Now anyone can participate at some level. That doesn't mean you throw money into every shiny startup that pops up. But it does mean the door is open in a way it wasn't before. The rich understand that backing early ideas is a long game. They don't expect every investment to win, but when one does, it can change the math completely. Another area where the wealthy are parking money right now is real estate. And it's not just the luxury penthouses or beachfront homes you see on TV. What's happening is a move into accessible real estate investments that don't require millions. Fractional real estate platforms like Fundrise or Realty Mogul allow everyday people to invest small amounts in real estate projects. That means you can tap into the same wealth-building tool the rich have relied on for generations, but without needing to own an entire property yourself. Wealthy people have always loved real estate for two reasons. First, it produces income. Rent checks, lease payments, or commercial contracts provide cash flow. Second, it tends to appreciate over time. Even when markets dip, property has a way of bouncing back and climbing higher in the long run. When inflation eats away at the value of money, real estate holds strong. That's why so many rich people see it as one of the safest long-term bets. And now, the same model is available in bite-sized pieces for anyone willing to start. Beyond that, something else has been quietly growing: alternative assets. This is where the rich have always had an edge. They buy things like art, collectibles, farmland, even music royalties, not just because they enjoy them, but because they know they appreciate over time. For most of history, this was off-limits to regular people. If you didn't have millions, you weren't buying farmland or paintings, but the game has changed. Today, you can buy fractional shares of these assets, just like stocks. The idea is simple. Instead of needing the full amount to buy a Picasso, you invest in a small share of it. Instead of buying 100 acres of farmland, you own a piece through a fund. That's how the rich think. Spread money across things that hold value no matter what happens in the stock market. And now, the everyday investor can do it too. Of course, stocks are still a massive part of the story, but here's the difference. The rich aren't trading in and out of positions every week trying to time the market. They don't waste energy on guessing what will happen tomorrow. They invest in ownership, they pick companies they believe in, hold for the long term, and let compounding do its job. Many of them favor boring, stable businesses that generate consistent returns. It's not about excitement, it's about growth. What most people get wrong is thinking you need insider information or risky bets to succeed. In reality, many wealthy investors stick to broad index funds and blue-chip companies. They know slow, steady growth beats flashy wins that rarely last. While others panic during downturns, the wealthy see opportunity. They buy more when prices are low, and they stay invested when markets recover. That's how wealth multiplies over decades. Another place the wealthy are putting serious attention right now is into technology and innovation. Things like artificial intelligence, clean energy, and biotech aren't just buzzwords. They're industries shaping the future. The rich understand this. They don't necessarily know which single company will dominate, but they know entire sectors will expand massively over time. That's why they invest in funds and ETFs that spread exposure across these areas. It's a way to ride the wave of innovation without needing to pick winners perfectly. What's fascinating is that none of this is out of reach. Whether it's startups, real estate, alternative assets, or technology funds, the average person can start small. The gap isn't always money, it's mindset. Most people think, I don't have enough to invest. But the rich didn't start with millions either. They started by treating money as something to be grown instead of something to be spent. That's the shift anyone can make. There's also the point about diversification. Wealthy investors don't put everything in one basket. They spread money across different assets, industries, and risk levels. That way, even if one area struggles, the others hold steady or grow. For a regular person, this could mean balancing stocks with real estate, adding a small slice of alternative assets, and keeping some cash available for opportunities. It doesn't have to be complicated, but it does have to be intentional. And here's something most people overlook. The rich also invest in themselves. Courses, coaches, experiences, networks. These are all investments too. They know that the right knowledge or connection can produce returns far greater than any stock. If you look closely, many of the wealthy put just as much emphasis on building skills and relationships as they do on financial assets. That's why their money continues to grow in ways that seem out of reach to everyone else. The reality is, the greatest asset you will ever own is your own ability to think, decide, and act on opportunities. And that only gets stronger when you keep reinvesting in yourself. The takeaway is this: the rich aren't magical. They don't have secret access to investments you can't touch. Many of the opportunities they take advantage of are now available to anyone who's willing to look beyond traditional savings accounts. The real difference is that they move their money intentionally. They don't let cash sit idle. They put it to work in places that have the potential to grow. Instead of waiting for the perfect time, they understand that momentum creates results. While others hesitate, they start small, stay consistent, and build up over time. And the truth is, this moment in time is special. With technology opening doors to crowdfunding, fractional ownership, and new asset classes, the barriers are lower than ever. That doesn't mean there's no risk. Every investment carries it, but the risk of doing nothing is greater. Inflation will eat your savings. Missed opportunities will widen the wealth gap. And by the time most people realize it, they've already lost years of growth. What feels safe in the short term, holding on to cash, waiting too long, often turns out to be the most expensive decision in the long term. The rich know this, which is why they stay invested. They let compounding, innovation, and ownership do the heavy lifting. And that's the part we can all copy. You don't need millions, you just need to start. The wealthy have already figured out where the money flows best. All you have to do is follow the trail and put your dollars to work in the same direction. Even if the first step feels small, the habit of putting money in motion is what separates wealth builders from everyone else. That's the difference between just surviving and actually building wealth. Over time, the gap isn't decided by who earns more, but by who learns to make every dollar do more. And the earlier you begin, the sooner you'll see that building wealth isn't about luck. It's about steady, intentional moves that compound into something far bigger than you imagined. A dollar invested today may not feel like much, but over years, it's not just the money that grows, it's your mindset, your confidence, and your opportunities. The truth is, anyone can play this game. You don't need to have insider knowledge or millions to start. You just need to remove the fear of beginning. That's what keeps most people trapped. They overthink, they wait, they try to time the market, and they miss out. Meanwhile, the wealthy keep moving, keep learning, and keep compounding. And that simple difference, repeated over years, creates a gap that feels impossible to close later on. So here's the real lesson. Stop looking at money as something to store and protect, and start treating it as something to grow and multiply. The rich figured out that money is a tool, not a trophy. They put it to work, they let time and compounding do their part, and they don't let fear hold them back. If you can adopt even a fraction of that mindset, you'll notice that the way you handle money changes, and so will your results.